Welcome back. Now, local vehicle exports to the U.S. plunged by over 80% in the first half of this year, when the 25% tariff was introduced during the latter part of the period. And now that it has been ramped up to 30% early in the second half, consequences will be even more hard-hitting. The tariff disruptions also place immense pressure on original equipment manufacturers in the sector. The industry's value chains are also very closely linked. For one, the component sector is a rich source of employment for the country, and the current tariff landscape spells trouble for the already high unemployment rate of 32.9%. Renai Moothilal, CEO of the National Association of Automotive Component and Allied Manufacturers, joins us with more detail. Renai, thanks so much for your time this afternoon. I guess let's start off with your reading of government's response measures. There was an economic relief package announced yesterday, as well as talks about diversifying markets. With, the components sector or industry being closely linked to the automotive sector, how much of a cushion does this provide?
Yeah, thanks for having me. I do think there's probably still a bit of water to flow under the bridge in terms of exactly what that support mechanism will deliver for the component sector, and I think for the wider auto sector.
Yeah.
Ultimately, we still continue to work and support the authorities to see if there is some possibility of finalizing, although it seems a bit difficult right now, still to keep working on finalizing preferential trade agreement with the US. But in terms of what was announced yesterday, I think particularly component manufacturers would benefit from some of the short-term cash flow support that was spoken about being put in place. Over the longer term, diversification into other export markets remain a possibility.
Yeah.
But let's not underplay the impact of possibly losing that US market.
Mm-hmm. And talking about possibly losing the US market and the impact that could have, let's talk about the impact it's already had. I touched on how we saw exports plunge 80% in the first half of the year. Talk to me about how the 25% tariff has played out in that industry, the components industry.
Yeah, I mean, so it's kind of been changing as I think with not only South Africa but across the world. The way these tariffs are being designed and implemented have been fairly fluid. So when things started out, it was just in the context of a Section 232 tariff, of which maybe less than a third of the lines exported into the US were impacted. Having said that, the new announcement says that those who were not categorized under the 25% 232 tariffs will now be subject to that overall, let's call it, wider 30% categorization. What does that mean? The entire basket of components going into the US is now impacted. Besides direct exports into that market, the other real problem that we face is that there's many suppliers or component manufacturers produce for supply or for assembly in vehicles that go into the US market. So it's a bit of a double whammy, both from direct export, but also from the fact that there are vehicles going into the US which make use of all of these components. And, from an impact perspective, I think we've already started to see layoffs and short time come into these plants as volumes have reduced.
Yeah.
So it's not a pleasant situation right
now. And that was going to be my next question. Just what are you seeing on the ground from those components manufacturers? What's the sentiment like? Is there nervousness on the ground?
Yeah, I think it is probably the biggest source of concern, not only for South African business in the component sector. Remember, the component sector is globally integrated, right? So we've got a high number of multinationals based here in South Africa as well.
Yeah.
So I think from a global business or investor perspective, South Africa, with the prospect of high tariffs into the US, does drop a bit in terms of our attractiveness for long-term investment. Components, as you can imagine, everyone drives a vehicle. They are safety critical. So it's not something you can switch on and off within a day or a week or a month. So we do expect in the short term, contracts going into the US will be honored. The US is expected to pick up significant intermediary inflation as a result of that. But if the situation continues and those tariffs stay in place, within a 12 to 18-month period, we can start to see significant tapering off. Where we are seeing a real negative impact right now is on where companies are exporting, have the possibility of new export contracts coming into play. We've got examples where companies are being said, hey, no, sorry, I don't think we're going to continue or going to consider you for the next round of this particular export contract.
And just quickly before I let you go, how confident are you that the SA delegation, the DTIC, will be able to seal a deal?
Difficult for me to kind of predict. I do believe that, at least from a sector perspective, we've supported with really good, strong data and arguments as to why a deal makes sense. Interestingly, maybe the viewers don't know this, President Trump's administration has been very vocal about wanting to address situations where there's an imbalance in the trade relationship between the US and South Africa. Auto components is exactly the opposite. We have been heavy in terms of US components penetrating our market. Last year, more than 16 billion worth of components coming into the country, and we exported just over 4 billion. What does that mean? There's a story that needs to be very related to the course of to say, hey, in this particular space, you guys are actually benefiting from the trade relationship. So having said that, I do think there's a lot of hard work ahead for the negotiation team, and we look forward to be able to see that.
All right, let's leave it there. Thanks so much for your time and sharing those insights. And that was NAACAM CEO Renai Moothilal.